Welcome everyone. You cannot believe how excited I am to stand here in front of you, talking to you, our audiences. You see, I've been dreaming about this show for a very long time. So welcome. Welcome to White Spaces. This is a show where we will be talking about new ideas, technology, meeting different people, and discussing innovation. We'll be talking venture capital, startups, and all things that are helping move our world forward. So stay tuned. We got quite a show for you tonight. We have a very special guest coming. We're going to be looking into the past, forecasting the future, and discussing incredible ideas. So let's look at what's been happening in big tech in the past few weeks. As you know, we're not entirely out of the COVID-19 pandemic. But what's interesting to me is how big tech is dealing with it. Google, for example, has allowed its employees to work from home up until June 2021. That's almost a year and a half. It could be that the trend might continue till 2022. From US, we're going to China, where despite the TikTok controversy, the Chinese big tech is having quite a year. So much so that China has never seen that many initial public offerings. Now from China, we're going to Eastern Europe, where the Central Bank of Lithuania has issued its first digital asset. And granted, the tokens are there to commemorate the 1918 independence, but it's still quite an interesting development. So, from here onwards, I would like to introduce you to my guest. He has been working in crypto and blockchain for the past 2 years. But does he think that crypto and blockchain is better than sliced bread? Let's find out. I want you to welcome Ruslán Machov. Thank you for coming, Ruslán. So let's start off with trying to understand where you stand on cryptocurrency, blockchain, and what I'm particularly interested in is decentralized finance. You're a financial professional, so please tell me what you think about this current trend.
Okay, well, first of all, thanks for inviting me, Pavel. It's a pleasure to be here. Well, when it comes to your question, obviously, as a finance professional with a banking background, I look at the things from the banking perspective or from the perspective of delivery of financial services. And I think when it comes to blockchain, in simple terms, it's just a way to store data. So it's something that competes with the obsolete, old-fashioned banking systems. We all know that banking systems have the development history of the past 10 to 20 years, and they are extremely expensive to maintain. And I think that's one of the reasons why people see application of the blockchain technology in distribution of financial services, in storing value, in making payments, in making investments, in making bets on certain assets. And I think decentralized finance has a potential, well, blockchain technology has a potential to emerge as a subsegment of financial services, which is called decentralized finance. And the simple reason for that is the fact that it's way less expensive to maintain those systems. It's way less expensive to distribute financial services, to build financial products. And if you have unit economics, which is 10 times at a lower cost compared to the banking system, which is becoming obsolete nowadays, then I think it has quite a tremendous potential.
Interesting. But we've seen the wave of ICOs in 16, 17, 18, then there was the big Bitcoin crash, and then we went into what is called the crypto winter. We've seen a number of players come up and then a whole host of them die off and cease to exist. Mm-hmm. I'm still looking for an application or a product or a service where blockchain can truly shine, and I haven't seen that. Yeah. And I've been working in the same industry together with you for the past 2.5 years, and this is what I'm looking for. When will we see that breakthrough usage of blockchain technology?
Yeah, well, first of all, I think we need to distinguish two things. We've been here before with other technologies. 3D printing has been extremely hyped in the previous decade, and everyone was betting on that. We'll 3D print our food, we'll 3D print our houses, we'll 3D print our other household items, or like people will start 3D printing guns, which actually they do. So each new technology follows a certain cycle of inflated expectations. It's a hype cycle. And I think 2017 was just one of the peak years where the inflated expectations about the blockchain technology and about the disruptive nature of the technology have been extremely optimistic and unjustified. It takes many, many years for a new technology to disrupt things. Why? First of all, you need to figure out how to build things on a new technology. But if you don't have even uncertainty in the underlying technological protocol, for instance, in the past, there were different protocols for video cassettes, there were different protocols for compact discs, and only one of them became the leading standard in the industry. And it's the same with the blockchain technology. We're at the stage where the phase of inflated expectations is over. There are many projects which have been financed during 2017 and raised tremendous amounts of capitals for a startup through ICOs, and they still have that pools of capital on the bank accounts, in the treasuries, or in crypto wallets. And they're still trying to figure out some basic things. And for instance, I can bring you a couple of examples. I think the challenge of applications built on blockchain technology is the fact that the developers would like to bring the notion or the whole concept of confidentiality and not tracking users. But if you don't track your users, you don't understand what they do on your network, or how they use your product, or whether they use your product at all. How can you build a product which satisfies their needs if you don't know what their needs are? Or how can you maintain your client base if you even cannot observe what's your attrition of the clients, or how many clients you're losing every month, and how many new joiners still remain users of your app 7 days after downloading it, 28 days, 90 days. So there are many challenges, and I think we're at the stage where it's a like post-hangover. We had a tremendous party in 2017. Everyone had a hangover, and some people had headache in 2018, 2019, and in 2020 we see that only the ones who came to the party with the real intention are the ones who are building things. Yeah. And I think it will take maybe some years more to see viable applications of the technology in financial services, in music rights, in logistics, in supply chain management, etc. So to wrap it up, I wouldn't be so impatient, and I would forget the hype of 2017, because people were promising that it will disrupt everything. They were putting the word blockchain in the middle of any sentence, which never made sense. And we all know, we've seen quite many projects which didn't make sense in the past years. And I would say approximately 80–90% of blockchain-based projects just do not make sense at the start, because they are not solving any problem. It's a technology that is looking for a problem, but if you have a project which is not solving any certain problem, then how do you know which way it's going? And I think we're at the phase where there is a divide between extreme exuberance and optimism and actual doers. And I think the actual doers will be the winners in the next years. Yeah. Who will push the blockchain technology into mass adoption? I have one theory. I think those will be central banks. In financial services, definitely. Central Bank of Switzerland, Swiss National Bank, Riksbank, or the Central Bank of Sweden, are working on national currencies which are built on the blockchain technology. They've moved pretty far away with that, especially in Sweden. And I think the centralized governing organizations like central banks or like governments will be the ones that will end up pushing the technology to the masses. So we need more years. I think we will see things change in the next 5 to 10 years, but I wouldn't be impatient and expect everything to change overnight. It's just not possible with any technology. We've seen it before, and it's the same with the blockchain technology.
Yeah, and that's a very good point you're touching upon, and I think my biggest issue and my biggest concern with this is there were incredible roadmaps drawn out in 16 and 17 that by 2020 or by 2021, projects that have raised hundreds of millions in ICOs would be flying right now. I mean, we'd cure cancer, we'd go to the moon, we'd colonize Mars. These were applications with blockchain technology in them that would raise these crazy amounts. And I think what the whole industry got wrong is if you look at traditional capital raising cycles, you would first address the problem, then you'd find a solution to that problem, then you'd have the product market fit, whether your product actually fits that specific market niche that you were addressing. So you test it, and then at some point within those periods, you go to venture capitalists, angels, you start raising capital, you continue to grow your market share, you acquire new customers, and then somewhere along the line of this cycle, which can be anywhere between 8 to 15 years, you end up doing an IPO or you would get acquired by a large company. But the good thing is that the proof is in the pudding, and then you would have actual market giving you feedback on what you're building. And there's only one testament, it's the market. Where with ICOs, we got it in reverse. We've promised everything, we've done the IPO, and now we're building things. But is the market responding? Time will tell.
Yeah, well, definitely the market is responding, and it's responding in a way that it applies discounts to many ICO funded projects nowadays. And it's pretty sad in terms of the depreciation of the value of the utility tokens that they raised to finance their projects. And actually, I've seen quite many examples nowadays who raised ICOs, capital through ICOs 3 years ago, and either they stand nowadays in two groups, still trying to figure out what problem they're solving and what product they're building, because the initial hypothesis came out, it just doesn't work. And they forgot that there are many iterations of trying to find your product and market fit, and they're still looking for a problem. They're not even iterating with the product market fit. And the other concept, or the other group, what I see and quite well represented in this space, are the companies or distributed teams that's still trying to solve some basic technical things. So they're still solving some basic things which normally I would assume, like if we look at many startups and which are being financed through a traditional venture capital cycle, angels, friends and family in the pre-seed seed stage, and then venture capital funds, they come out with quite a strong and polished hypothesis at the beginning, and normally they do not deviate from that much. But what we've seen in the ICO and the blockchain space, that many ICO funded projects have deviated from the initial hypothesis quite significantly. Someone wanted to pull bank accounts, now they're developing automatic crypto trading bots as an investment service. So just one of the examples, and there are many, many of them.
Yeah, it seems to be a bit of a hype cycle right now with crypto trading bots. And I've seen so many of them in the past few months, actually. So different strategies, you can build your own bots, you can back test them, and of course there's good innovation happening in that space, but it's also, I feel like there's a space for these specific financial instruments, so to say, financial technology, and it's not for everybody. And I also have a bit of a problem that these kind of companies are commercializing something that should not be available to traditional retail investors. But that's a completely different discussion. Thank you for your input on blockchain and cryptocurrency. I think your experience has taught you a lot. But let's maybe take a step back. I'm more interested in you.
Okay.
Despite the fact that I've known you and we've been friends for a while, I'm interested in, so you studied finance, and then you worked in a bank, project finance specifically, and then you went to private equity, and then you went from private equity, you went into startup world, and you started advising startups and building your own startups, and you've been amongst the C-level executives for some of the startups. and now you're also sitting on the advisory board of a bank. So what made you shift from a stable career? I mean, does it get more stable? Most probably pharmaceuticals is more stable than banking. But what made you shift from a very stable career path, and I'm sure you were doing great, to a career that's riddled with absolute uncertainty that doesn't necessarily depend on your performance? You have market trends, some other startups are faster to market than you are, capital raises, Corona even. I mean, there's so much insecurity in the way that startup world is. So what made you shift?
Yeah, well, yeah, that's true. I started my career in banking doing project finance and acquisition finance, and I've done it for 4 years. And I think there are actually two foundational reasons why I decided to leave banking. And the first one was a general, maybe conflict of values. I've seen my colleagues, I've seen the colleagues who were 10 years older than me, and I was scared. I didn't want to turn into someone similar like them 10 years down the road. And I saw there is no long-term solution for me in the banking. It's risk averse, it's process driven, it's highly regulated, and sometimes you get the feeling it's a bit boring, but only sometimes. But actually, we had a lot of fun, and we were working on many amazing projects. And the second reason why I left banking, because I got a call from a friend, and he was in trouble. So he was a founder of a private equity fund, and he was working on listing of one of his portfolio companies on the Warsaw Stock Exchange. And he had a problem. His internal analyst associate could not finalize the valuation of the company for the listing, so he couldn't finalize the financial model, although he has been working on that for 1 week. So he told me, listen, you have 24 hours and you have to build it from scratch. Can you do it? And I said, well, I can try. And what I've done, I basically, at 5 p.m., I left my job, I asked for a free day from my boss, and I went to his office, and I've been working with the management of the group which was being listed, and also with the organizers of the listing for overnight, in order to basically build a financial model and explain the whole investor story to the organizer of the listing. I could not achieve it in 24 hours. I've done it in 27 hours, together with the guy who couldn't finish it on his own. And it was like just a night without sleep, working nonstop. It was extremely difficult, but I think it's that experience of resilience and solving problem quickly, ad hoc, was something which set the foundation for my future career path. Because just a couple of months down the road, I got a call from the founder of the private equity fund, and he said, listen, we need to talk. Can you come to our office? And this is how they asked me to join their team. And I found it was an incredible step. It was a logical step where you step out from the banking world and you do something which is more exciting. You invest in companies which are sometimes undermanaged, and especially in Eastern Europe, and they were extremely undermanaged in those times. You can learn a lot, you can do something very exciting, but you do not change industry that much because you just change the side of the table. You sit on the other side of the table compared to your clients in the banks. And after that, I think by working with C-level people of our portfolio companies, I realized how much hard work and how difficult it is to run a business. And I was really excited about C-level guys and our CEOs and CFOs. And at some point of time, I felt I want to try myself in such a role. Will I handle? Will I make it? Or I won't? Mm-hmm. And it was the reason why I left the private equity company and joined a consumer finance bank, which needed some financial restructuring. And occasionally, I turned out to be the youngest bank CFO in Estonia in the year 2010. It was an exciting journey, but after that, I decided to follow my long-term dream, or to follow my passion and to study finance at a certain school, which I always wanted to do, but I never had either time or money to do it, and that's why I quit my job and basically packed my things and submitted my application to London Business School. And this is where I got into startups.
Okay, interesting. So basically, reason one, didn't want to be a banker wanker. That's out. And reason number two, you got sucked into private equity, appreciated the fact how people are working, and then decided to also become part of the co-founder in a way, right? So part of a growing business, and you wanted to build something by yourself.
Yeah, I think one of the main drivers for me was to leave banking and to go to school. Is just I wanted to change geography because I wanted to learn new things, and I was mainly active in Northern and Eastern Europe, and I wanted to be more focused on the Central Europe. And I had Switzerland as my long-term goal for realizing myself professionally. And it was the reason why I decided to study at LBS, to learn new things, to meet new people. But what happened is, obviously, in terms of curriculum, you don't learn many new things if you have already practiced finance before. But I've met many incredible people. And as I was a little bit bored in the second half of the year, I ended up co-founding a fintech company called Spread.
Okay.
I failed with that, but it's a separate story.
It's actually very relevant because I am very curious to see. So in between your private equity and Spread, you did London Business School. So how much of that knowledge that you've acquired in London Business School has actually helped you on your way as a founder of a startup company? How much of the tools that you acquired in that school you've actually applied? And most importantly, something that continues that I continue to obsess about is, can you actually learn some of the key traits of an entrepreneur, which is opportunism, risk-taking, grit, the ability to continuously push despite all the setbacks. So I still haven't been able to answer that question, but I'm curious to hear your thoughts on this.
So to sum up your question, whether you need a formal education to be an entrepreneur.
Exactly.
I have to tell you, I learned a lot of many new things at London Business School, but it was not the textbook knowledge. It was rather about the style of doing business in Western world. It was about the business culture. It was about how investors see the markets and how they invest in companies. And I would say, as I've taken a lot of electives around corporate finance, I'm a corporate finance guy, and I always wanted to be in corporate finance. Of course, I took venture capital and private equity and entrepreneurship classes. And I can tell you those were very valuable and very useful, especially if you want to be a startup founder, because I think the difficulty of a startup founder normally in aggregated terms, because startup founders are normally technical guys, and they're being taken advantage of by the early investors who basically push them with the structure of investment terms into the corner. They get liquidation preferences, and they get other pretty complex and not favorable terms on the neck. And in order to avoid that, I think like the venture capital class was very useful because we went through simulations and we were comparing different financing offers from VC funds for a startup, a real situation, and we were analyzing different terms and what's behind them. So if you do such simulations in the class and you discuss it with your professor and with your peers, then you already know how to guide yourself in real life when you'll face that situation again. And I think it's helpful. I think what you can learn in business school definitely helps you to have a structure in your head. But being eager to take risks, I think it comes down to personality and personal preferences, yes. I'm not sure you can learn it at business school, no way. And I think in order to be an entrepreneur, you just need to keep trying and not to lose faith in yourself and in your team. And you need to continue trying, and not being afraid of failure. And at some point of time, your project will be successful. I'm not sure you can learn it in a business school. I think it's just the attitude and eagerness to take risks and not being afraid of failure.
So what happened with Spread? Why did it fail?
It was an incredible project, and we were self-financed, and in 7 months, we built an incredible product, which was a payment channel which you can embed in e-com shops and buyers of fashion goods can buy goods on installments without paying interest to us because we were charging a commission from merchants. We lost our CTO when we were accepted to Seed Camp Week London. And after losing a CTO, it was nearly impossible to continue the development from the point where he left at. And why we lost our CTO? Because one of the co-founders was coming from the private equity investment banking background, and she's been a little bit harsh towards smart creatives. And I think that was one of the reasons why the guy just got frustrated and he decided to leave, although he was a co-founder as well and he had an equal stake in the business. So I think it was the team. If you want to set up a business, you need to set up with people with whom you worked before or whom you know for a long time. I would not advise setting up a company with strangers. No way. You shall not do it, but it was my first mistake. I learned it the hard way. And yeah, that was the reason.
I'm of the opinion that I think the three key components in the startup world is one, success, obviously. So one, you need to have an absolutely amazing team, and you need to almost feel each other in order for you to succeed. And then number two, for me, it's product market fit. You need to be solving some kind of a problem. And then three, and it seems to me that you guys were solving an actual problem. And three is, again, team, right? So you need to gel well together, but at the same time, you need to be able to work together and actually deliver and build things. So it's very interesting. But I'm very happy to hear that you've learned your mistakes.
Of course, of course.
Yeah. Let's talk creativity. I know that you are quite creative. You are into street photography. You've been playing around with video. You produce music, and you're doing a bunch of different things. And I'm actually curious, and I'm sure our viewers are also going to be curious about the backstory of this picture.
Okay, so basically, the story of that picture is pretty simple. I was visiting my home while studying at London Business School, and well, the teddy bear is the gift I've given to my fiancé like many years ago, and now my daughter is playing with him. But the fur coat belongs to my fiancé at that time and wife at the current time. So I was just in a good mood, and she told me, listen, like the fur coat, it was given as a gift by my father, but it's a couple of sizes bigger than actually I am. So I thought, okay, well, let me try to put it on. I took the teddy bear from the sofa, and she took a picture of it. What you don't see, the lower part of the picture, because I was only wearing underwear, there were no pants.
I'm very happy I'm not seeing that, but it's also part of one of your profiles.
Yes.
Right? So it's a music profile, or?
Yeah, on SoundCloud probably.
Okay.
Yeah,
but
and
why
on
that
Facebook.
specific? I mean, are you trying to be kind of a bit gangster, but at the same time with a teddy bear? Like, what was the thinking?
No, I think.
Or it's just like a goofy picture that you wanted to put?
No, it's a sort of goofy picture I wanted to put, but I think I like the absurdity of the situation on this picture, and I think that's pretty cool because it sets it apart. Because normally, how do you see people positioning themselves on social media? And it's pretty standard and it's the same everywhere. So I just wanted to have something which looks a little bit different and is a bit unusual, but also funny at the same time and not serious at all.
I'm also quite a big fan of, together with another 5,000 people that are following you or on Instagram, of your street photography. And I don't know if we can see this. I'm also going to put this. This is one of my favorite pictures that you took in Kyoto. And then the other one is in Zurich. So why street photography? What is it that you appreciate about capturing people or objects within a specific moment? Not staged, very kind of open, free-flowing. What is it about street photography that you appreciate?
Yeah, I think it's a good question. I like showing the inner nature of people, and I think you can do it only in a way if you capture them in natural environment, in public spaces, without them knowing that you're taking photo of them. And I think my passion towards photography started at the age of 10 years when my father gave me a film SLR, which was a Soviet camera Zenit ET, and he also gave me a user manual. So I had to read through the user manual several times to figure out how to use this manual camera, how to set exposure, how to set aperture, and how you adjust the film sensitivity. And basically I grew up with a photo camera in my hands, and what I realized with modern cameras that they are so small that people don't notice you are taking pictures of them. I like rangefinder styles of cameras because you don't cover your face, you cover only like one half of the face, yes, one eye, and you can smile towards the people if they will discover you're taking pictures of them. So what I like about street photography is that you capture people and how different they are in everyday life, and I think that there's certain beauty in it. And as a genre, street photography started many years ago, and it's been evolving, and it's just, I think it's a good way to spend time just walking on streets for half an hour, for 1 hour with a camera and trying to find some interesting shots.
Really glad that we're talking about creativity, because the next topic I want to tackle is creativity and entrepreneurship. So we all know creativity comes part and parcel in the innovation process. So people need to get to white spaces, so to say, which is why we named the show as well, White Space. We're talking about innovation in different technologies, but when it comes to entrepreneurship, when you actually need to just buckle down and figure out a way how to make money, how important is creativity?
I think creativity is very important, also not only in entrepreneurship, but overall. And maybe I'll briefly comment why I think overall it's important and why it's important in entrepreneurship. I think creativity is probably one of the few qualities of a human being which will never become a commodity or will be replaced by AI, by artificial intelligence. And that's something which I suggest people develop in their kids from early years. And I think that's something which allows you to find solutions, creative solutions to different problems, that you are not getting lost if you face a problem, but you're trying to apply different patterns in thinking and combine different neurons between two parts of your brain in order to come up with possible solutions. And entrepreneurship, any business idea is effectively a solution to a problem. And I think one of the particularly aspiring entrepreneur for me is the founder of Manis, Norris Koppel, an incredible founder, an incredible person, an incredible guy. And he came up with a solution to the problem of difficulty of opening a bank account in the UK while being on a beach during his vacation time. So he started thinking about the problem, he started calling friends, and then came up with the concept of Manis, where you can onboard people in 2 minutes instead of waiting for 2 weeks for the UK Street Bank to get you accepted as a client. So in my view, creativity is very important. And in entrepreneurship, you will face creativity on many facets, on many levels. When you develop your investment story, you need to polish, first of all, the storytelling, you need to polish the visuals to make it compelling and eye-catching. You need to have a proper website which looks nice and like it's taken seriously by the people. You need to develop your style of marketing in order to acquire clients or persuade them to test your product or a service. So I think, and obviously when you're thinking about the concept of developing a product which will be the foundational base of any business idea or of your future company, I think creativity is very important. And in my view, founders are very creative people, but in the sense that they also know how to capitalize their creativity, and I think that's a cool feature.
Interesting. You mentioned Manis, but Manis wasn't necessarily the first in, let's call it neobanking, fintechs. Mm-hmm. There's Revolut, there's N26, and I'm also a Revolut fan. I have an account. I'm particularly excited about all of the different, not with the latest news specifically when they decided to cap the transfer amounts without the fees, but we can talk about it more. so here's my question to you. As a finance professional who sits on the board of a bank, you've been in the banking industry for quite a while. Don't you think companies like Monese, Revolut, N26 is the same banking experience, just with a better user experience? And that's pretty much it. So fintechs, effectively, if we boil it down, is just same services. There's not that much innovation except for user experience. So it's just the same candy, just wrapped in a bit of a different wrapper.
Well, yes and no. And the thing is, I think everything needs to be analyzed in the context. And most of the companies you mentioned, they started out of the United Kingdom. For me, coming originally from Estonia, where financial services and banking industry is well developed and you as a client is pretty well treated, we do not realize how horrible are financial services in the United Kingdom, which are provided by the street banks. And I experienced it myself when I was living in London. Opening a bank account was a 3-week adventure for me, and they ask you for things which you don't have as a newcomer to the country. And the only thing that helped or saved me was obviously a letter from the London Business School confirming that I'm an adopted student or I'm an admitted student. So banks cannot innovate. They cannot deliver incredible customer experience or user experience. And that's why we've seen an emergence of many different fintechs in the last decade, because they were basically addressing normally one problem. Most of the fintechs started as a mono-product solutions to something that banking was not addressing on a significant level, or where the banking was extremely inefficient and was overcharging their users based on fees. And fintechs, of course, if you open the bonnet, you'll see quite a lot of traditional banking infrastructure being used for developing, for instance, international money transfers, peer-to-peer services. So there is some innovation in terms of the algorithm, but the missing part is still being solved using the traditional banking. Where the innovation is, of course, it's a user experience, it's a nice interface, it's a marketing innovation, because especially I was aspiring TransferWise before they became too big, because on the website, the first slogan on the landing page was bye-bye banks, you have had enough fun. And I think being bold in marketing and trying to differentiate from established players and attracting a new crowd of users is in that sense also, in my view, innovation in marketing. So it's not just a nice user interface, it's the whole experience that comes with that, the whole advantage in transparencies, in fees, and I think this is how people vote. Like Revolut has more than 12 million users, and I think it's something incredible. And I think that confirms it's not just something nice, but it's just a great experience.
Follow-up question to that. Would you get your wage submitted to a Revolut account?
No.
Why is that?
Definitely not.
Why is that? What's the problem? If they have the same infrastructure underneath and they're actually better, why not? Why not just abandon your traditional bank and go all in with Revolut?
Exactly. So in my view, that's something Revolut cannot deliver at this point of time. My problem is that I want to have a certainty that if the bank goes bust, my deposit is insured. And Revolut is licensed in Lithuania, a country with 3 million people, and has 12 million users. So if Revolut goes bust, the deposit insurance fund of Lithuania will not be able to compensate all the depositors, in my view. So therefore, it's a remote risk. It's a very distant, small risk. But Revolut is something you take that card with you when you're traveling and you save on the currency exchange fees, currency conversion fees, yes. But is it a product for storing significant amount of savings, of cash? I wouldn't say so. It will definitely become, it's already on the way, but I would prefer probably different layers of financial services, fintechs, and combine it with banking for different purposes.
Interesting. I also would not get my wage disbursed into my Revolut account, despite the fact that I absolutely love their service, and especially when I'm traveling. I think it's one of the best out there. So let's move forward a bit with our topics. And so you've been working in venture capital. You've been working in private equity. You were a startupper yourself. You're advising a few startup companies. So could you please explain to me, like, I'm 12-year-old, right? So what are the main stages of fundraising? So you start up a company, how do you move forward? Where do you get the money from? And then also, what are the different vehicles available? So in case some of our audiences would want to know, what can they actually do once they start up? Could you explain that to me?
Yeah, okay. Well, stages of fundraising and how to start a business. Let's start it from this perspective. I think as a founder, you need to have a solution to a problem. You should have identified the problem, and you need to have an idea how to build a solution. And obviously, in most of the cases, people cannot build solution based on their own financing, therefore they need external investors. First investors who invest are friends and family, and sometimes fools as well, so 3F. And I think those are the ones that help to move the idea to a new stage. And when it comes to the fundraising process, I think what is important that you need to articulate your business idea in a way that the investors understand it. It needs to be very short, but follow a certain structure which is considered an industry standard in venture capital or in the startup space. So where you start with the problem, solution, product, team, etc. So if you want to start a business, I would say try to put your idea on slides, show it to different people and get their feedback, and ask them if they understand what you're trying to do, and if they're eager to invest their own money into that solution, if they're eager to take the risk.
Okay. And then what's the difference between venture capital and venture debt?
Yeah, both are the sources of capital, and mainly venture debt is used as an add-on financing to venture capital for companies that are in the mid or in the late stage of their life cycle, which already either have a significant user base or very close already at the level of profitability. And I think the difference is that it's used in combination. So the startups or companies raise capital from venture capital funds. And in addition to that, they may be interested in extending the runway, and they attract additional capital by raising debt, which is basically non-dilutive to the founders and to the investors.
Yeah. But isn't necessarily credit isn't necessarily bad? I mean, you know, you should pay your dues before anything else, right? I mean, this is, you know, never overuse your credit card, always have one, never multiple, never go all the way down, don't overspend. I mean, these are some of the basic principles that you learn as a person. Isn't the same rules apply in the startup world? I mean, why would I try and get a line of credit if, you know, what's the purpose?
Well, I think the main advantage of using debt for financing business is just it costs you way less than raising equity, because you are not diluting yourself and you are not giving away equity, which may bring you 100x return multiple in the future. So debt you pay at the cost of debt, either interest rate or something else, or fees on top of that, and it's way cheaper. But of course, debt is at a certain degree is risk. You need to understand how you're going to repay that, what are the repayment sources, whether it will be refinanced from the next round, or whether you will be repaying it from your operational cash flows. In that sense, debt is not a bad thing. I think it's way cheaper way or source of capital for startups than VCs, definitely.
All right, fair enough. So let's assume that I'm one of the folks on the other side of the lens, and I'm actually watching our interview, and I get really inspired with what you're telling me. And I'm like, okay, I got venture capital figured out. Ruslan inspired me to be an entrepreneur. I think I got the grit. I think I'm risk-taking enough. Okay, and I think I have an idea that potentially could be the next unicorn, which is companies with over 1 billion valuation. But I don't know where to start, right? So what should be my first 3 steps? Like, what would you recommend people do before they can, raise, or maybe fundraising is also part of those 3 steps. So,
yeah.
Yeah.
I would say if you can build a prototype of a product, go and build that because you can demonstrate how you are going to solve a certain problem. If you can get users to test your prototype, it's even better because you can verify that actually the problem you are solving is something is necessary for people in the economy and they are willing to use it. And of course you need to raise capital when you have certainty that the problem you are addressing is significant, that the potential market is large enough and you'll acquire users. You need to get capital to grow, to develop your product on a certain professional level, because you cannot conquer the world with a prototype, definitely not, and to finance acquisition of the user base. So there are different steps, but just try to build a prototype, try to put your investment story on paper in a compelling way that resonates with investors and is easy to understand, and try to get people who want to use your product, and if they're paying for that, it's even better because you can have a sign or proof of monetization that actually people are eager to pay for that and not to use it for free, because free users, they're not worth as much as the ones who are paying.
Yeah, the proof is in the pudding. Like, show me the money. I think that's the main testament. This is the same thing that we talked about previously. This is the validation from the market. I think that's quite important. Okay, great. So I think as we're slowly wrapping things up, so my personal conviction is that there are way too many great ideas out there that are generated by amazing minds, right? I think we are pretty much at the peak of our civilization when it comes to development, and there's more coming. But I'm also observing a trend that a lot of these ideas go, unfortunately, underfunded. So how can we change that? Is it a matter of having more investors, providing them with more access, having different educational programs, maybe inspiring people, giving them courage to actually get their products and ideas out to the market? How can we change this? What do you think?
I think definitely here in Europe we need to catch up with the US in terms of the sophistication of the venture capital industry. We don't have sufficient number of investors, we don't have sufficient number of angels, but it's growing really fast and it's improving. For instance, in Switzerland in the last year, the volumes of venture capital investments have increased 100% compared to the previous year. So we are closing the gap, but we'll never be on the same level as the US. Definitely not. So there are many people with ideas. That's true. But I have to tell you, business idea is not worth anything. What is worth or what is valuable is execution. So if you can execute it, then it means that you can push your idea towards implementation. And if you can execute it, then you need to shout out loud to attract attention of investors. You need to shout out loud to attract attention of your test users. So it's just a natural selection. Of course, there will be many more aspiring entrepreneurs than the successful ones. And we always read on the news about someone who has established a unicorn and cashed out and sold like some small stake in the company and walked away with hundreds of millions. And everyone thinks, wow, what an inspiring journey. But no one really realizes what's behind that. How many frustrations and failures on weekly, on daily basis are behind there. But we don't read that many examples about people who fail. And believe me, the number of people who fail in startups is in tens times higher than the number of successful people. That's the law of economics. Therefore, if you want to be an entrepreneur, you just need to be faster than others, you need to be louder than others, you need to be braver than others, you need to be bolder than others. And I think that's the key for achieving or progressing somewhere.
Thank you. I think this is quite inspirational. So let's maybe try and bridge that to the last question that I have for you. So both of us are from Eastern Europe. We are from Estonia. And what I'm curious is to understand how do you view the Eastern European region, not just in terms of the European Union, but also the neighboring countries, Belarus, Ukraine, Russia, obviously, and then going even further east, maybe capturing Kazakhstan and Uzbekistan. So there are so many talented folks out there who yesterday were building literally rockets and airplanes, and today they're in software development and they're building bots and robots and all sorts of exciting things on the forefront on AI, machine learning, blockchain, obviously, crypto, all of that. How can they get access to the local ecosystem of investors, of corporates that are looking for the innovations that potentially those folks are already building? So what would be your recommendation to them?
Yeah, first of all, yes, I agree that like the quality of human capital in Eastern Europe is incredible. And we all know that our school programs are really hardcore on math and on physics, but we also get a lot of art and humanitarian subjects, so like we get our creativity developed. And actually Estonia is one of the few countries in the world with the most exciting school education. But it's also the same applies to other East European countries where the legacy of school education from Soviet times and which obviously adjusted to the current environment is incredible. I suggest the people with creative ideas in Eastern Europe try to find local players in the startup scene, either incubators or co-working spaces or events where you can pitch in front of angels, because those are the hubs where you can start growing your network for getting new investors, for getting new customers, for getting advisors, or maybe for meeting some entrepreneurs who had already exits and first of all can help you financially, but also can help you with the stories about their own failures and learnings. So I suggest you just need to go out and find those ecosystem players in each of the countries. Of course, there is always an option to pack your things and to move to the US or to some European country like, I don't know, United Kingdom. London is a tremendous startup hub. Stockholm, Berlin, Switzerland is an emerging startup ecosystem, incredibly growing very quickly. And Switzerland has a lot of capital, and we all know that the future of private banking is quite tough because it's getting disrupted by the technology. So I think a lot of capital and a lot of wealth created in private banking will flow into technology and entrepreneurship in Switzerland as well. So my advice, go out and try to map the players in the startup space, visit the events, start networking with people, surround yourself with the like-minded people, because you're the average of people who surround you. So just be selective with whom you're friends and with whom you do business, and I think that's the path to the success.
Yeah. Okay. Thank you, Ruslan. So now that we've talked about the past, let's talk about the future. I would like to invite you to the whiteboard on the other side of the studio. So let's make a move over there where we will make prediction about the future.
I'm very excited.
So it's super simple or complex. And I gotta apologize before our audiences. This looks quite ghetto, but this is as best as we could do. So let's talk about future predictions, right? And how innovation would change our future. And I want you to be the most creative. Think beyond the box, outside of the box. There is no box, right? So this is called the steeple analysis. So it's social, technological, economic, environmental, political, legal, and ethical. So make a prediction, talk through it. If you want to talk about an impact on one of these items, feel free. If you want to do it across multiple, same thing.
All right. Do you need it? I'm not sure I need it, but it's a good exercise. Social, I think when it comes to education, higher education will be completely disrupted in the next 15 years, and the role of universities will diminish, will decline. More on-demand education like online platforms like Coursera or Udemy will be predominant sources of education. So when it comes to technological, I think people will study technology. So I think the weight of technological education in the whole mix of it, or educational basket, will increase. And obviously technology will continue disrupting and shaping our lives differently. I think when it comes to financial services, those will become completely contextual by the year 2035, which means that you'll have a personal assistant on your smartphone or maybe in your smart glasses, which will guess what you need next. If you are looking to buy an apartment or a house, it will offer you a mortgage. If you are looking to buy a car, or if you have already bought a car, it will offer you an insurance coverage and you just need to accept it, and that's it. That's the whole interaction, just press of the one button. If you need to pay something, actually you don't have to pay anymore. You don't need to take it out of the pocket. You just take the things and walk away from the store, from the physical store. When it comes to economic, well, as someone coming from emerging Europe, Estonia, I think Baltic countries will continue closing the economic gap in GDP per capita compared to the developed Western countries. And this gap, I think it will become 2 times smaller than it is today. So there will be continued high stage of economic growth, or the stage of the high economic growth. When it comes to environmental, then I think there will be, we already have countries which sometimes only use renewable energy, like Denmark. I think the ratio of countries completely transitioning to renewable energy will increase. There will be a reduction in use of fossil sources, the reduction of oil. Hence, the whole politics will be not around oil, but around the technology that shapes energy. 50% of the cars on the roads will be electric, at least 50%, I think, in the next 15 years. Political, legal, ethical.
Yeah.
Ethical is a tough one, because the ethics of AI is a pretty complex field. The algorithm has to decide if it's an emergency situation, there is someone crossing the street, who has to survive, whether the person on the street or whether the person in the car. So I think we'll learn a lot about ourselves and the stage of self-awareness and our understanding of ethics and how it's programmed in AI algorithms will go through a revolution. I'm not a legal person. I don't want to take significant views on the legal topics. And political, I suspect it's quite speculative, but I think there will be diminishment of full-time professional politicians, and there will be emergence of part-time hobby politicians, as it is in Switzerland. Mm-hmm. So if you are a politician, you have a second job, and by doing that, you can bring people with different backgrounds and different mixes behind the table or behind the conference call. So those are my predictions.
Nice. Will we still have Putin? Will we still have Trump 2035? What's your take? It's possible.
Trump, I don't believe. US is still a democratic country. Highly unlikely. When it comes to Russia, I don't know. Maybe. It's difficult to say. But when it comes to legal, then I think 80% of lawyers will be replaced with the algorithm, so they will be out of their jobs.
That's actually scary. So I like how your scenarios are not necessarily, all positive or all negative. They're a good mix. I think for those of you who are watching, I hope for your own benefit, you were taking notes from this phenomenal gentleman. So at this stage, I actually want to say thank you so much. Thank you for coming. This was really, really good, and I've really appreciated our conversation, and I hope you did too. And that was our pilot, so thank you so much. Thank you so much for coming.
Yeah, thank you so much for inviting me. It was very interesting and incredible. Thanks a lot. At the age of 21, I started working for a bank, and I was graduating from the university. So I would tell myself, first of all, develop as many creative sides of yourself as possible. Be more aggressive when it comes to investments, and do more sports.
Why more sports?
I had several burnouts in my life where basically my immune system was close to collapsing, and I always cured it by getting deeper into sports.
What about traveling?
Yeah, well, I traveled a lot for my work. Actually, yeah, I think it's a good idea. I would definitely like to travel more, and as I spent my 20s working and studying, although I traveled a lot, but still, yes, I definitely would like to travel more now.
And what would be the book that you would recommend to your 21-year-old self?
A book. Intelligent Investor by Benjamin Graham. I think that's the foundational book about anything related to investments and to understanding businesses. Because actually it sets up a certain filter in your head, and you are able to filter out all the craziness which was surrounding prices of crypto assets, for instance, which had some of them, or many of them, which had no intrinsic value. So I think getting really foundational things from investments is really necessary. And Benjamin Graham was a teacher of Warren Buffett. So this is how Warren Buffett became famous and very successful with investments, by just following Benjamin Graham's value investing approach.
So that was it. This is the end of our pilot episode of The White Spaces. I hope you enjoyed the show. This is definitely a first for us. We're really excited, and I wanted to thank our partners, Sexy BTC. I wanted to particularly thank my partner in crime, Oleg from Remedia. He's actually behind the camera right now, so you cannot see him. He's been producing this incredible show, so thank you so much. And one more time, thank you to our guest, Ruslán Machov. This is where we come to an end. You stay classy, ecosystem, and talk to you soon.